Futures down, rates up. This follows what was a very hot, like double hot September jobs report. Joining us right now, Stephanie Link, Chief Investment Strategist at Hightower, CNBC contributor. I think we're all trying to make sense of this. And, you could look at the market right now. It looks like it would open up down about 261 points. I think there's a view it could, it could get much worse than that. But, you listen to Jason Furman and maybe you'd say this is actually a good thing. What do you say?
I think that good news is good news, Andrew. The job market is hot, right? Today's report definitely confirms that, but it's not surprising because all week long we've been seeing pretty good data. JOLTS, initial claims, even Challenger Gray, hiring plans intentions were up 55% year over year. So that's good news. I think also pretty good news is that average hourly earnings today, excuse me, came in at 4.2%. It's not too hot, right? It's good. So that's good for the consumer, and the consumer is 70% of the economy. And so I think this is going to translate well into earnings, and I think we are going to see the market stabilize in October. And I think seasonally, I think we're going to have a run into the end of the year higher.
Okay, but what do you make then of the I don't know if it's a perverse idea, but it may be a different reality, which is that if you're sitting in the chair of Jay Powell, you're sitting going, my goodness, whatever we're doing is not working fast enough. I got to do more.
Yeah. I don't know if they have to do more. They probably just have to keep rates higher for longer. Maybe they go one more time. Maybe it's two. Is that really going to make a difference? They've already done the most of the damage, right, over the last 18 months.
But you've seen where rates have gone in the last 72 hours. I mean, there's been a sort of shift in the marketplace about, how long these numbers are going to, or how long these rates are going to be where they are and what that's going to mean to the economy. We're talking to Michael Dell and other CEOs about that and what that's going to ultimately do to demand.
Well, it's certainly going to slow things down into 2024. Is it a soft landing or recession? No one really knows. We're going to have to watch the data. But for now, the economy can handle it because we put so much stimulus into the economy. I mean, $3 trillion in infrastructure stimulus this year. That's huge. It's been a huge tailwind and an offset to the higher rates. I'm not saying that we're not going to slow, Andrew. We are going to slow. But I think the economy is able to handle these higher rates for now. And earnings are what I look at. And for the market overall, and when earnings go higher, stocks go higher.